Do you see Ethereum flipping Bitcoin at some point? And I mean, when I say at some point,
without question.
I'm having a hard time with that because when I talk to sovereign wealth, I don't care if it's Norway or the UAE or Saudi, they want Bitcoin. They have not got to the analysis that we've just gone through. They want the proxy of Bitcoin, and they want that volatility.
Hey guys, welcome back to Library of Wealth. Today we have Raoul and Kevin O'Leary debating crypto's next move. Powell believes the coming crypto regulations are even more important than supply and demand issues. This is because the benchmarks that are being designed is what all risk will be conversely priced against. Powell says we now have the power to price risk, which will have an impact no one expects. Raoul says the benchmarks will be a massive freedom for institutions and pension funds as long as crypto regulations are involved as well. Kevin O'Leary believes that regulations have had a bigger influence than anything in the market since the introduction of Ethereum and stablecoins. Let's listen to Kevin O'Leary and Raoul Pal share their views on Bitcoin, indexes, and how sovereign wealth will come into play. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
It's a turning point for crypto. That's what I think.
I totally agree. The point being is the big pools of capital, whether it's people like Apollo or Blackstone or BlackRock or everybody, sees yield, right? They didn't own gold because it didn't have a yield, and it's difficult for them because they have the hurdle rate we talked about before for so many of their clients. But it's a bigger story than that. It's much bigger than a supply and demand story. What we're actually creating is the benchmark interest rate for Web3. So this is the big daddy of which all risk will get priced against. Everything in the world is Treasuries plus or LIBOR plus, everything. Sure, in Europe, Italian spreads are Bunds plus. So we have an ability to now price risk. So how does this work? If I look at the Solana staking yield, which is higher than the expected ETH yield, once you adjust it for the volatility of the underlying currency, much as you would do with emerging market bonds, well, they match. So you've got pricing relativity. You can understand what's mispriced, what's not priced, where the risk actually lies. That creates an explosion in DeFi. Because once you have a proper yield curve, that you have and again, I'm going to use the term because people don't understand it, is risk-free rate. The risk-free rate is the fact that the ETH yield will be guaranteed. What won't be guaranteed is the value of ETH. It's the same with the US dollar. If you buy US dollar bonds and you're a non-US investor, the bond yield will go, the currency will go up and down against you or in your favor. So this whole setup is much larger than anybody expects. If we want to see where DeFi goes, this is the big unlock. It's also the big unlock for institutions. It's the big unlock for pension funds, as long as Kevin said, regulation comes as well. This is a much larger impact than anything that's happened in this space since the launch of stablecoins and the launch of Ethereum. That's how big it is to me. But it's not an overnight, you need to buy it now, it's going to go up immediately. I'm talking about structurally, you know, as Kevin said, as regulation eases, as people understand and have clarity, this becomes a monstrous asset for this entire new financial world.
Yeah. And if I could just add to that, if we can pull up the slide, you know, you look at valuation of ETH versus Bitcoin, you look at their S-curves, and here I show the two S-curves. You know, ETH basically crushes Bitcoin's, you know, adoption curve, and we all know why. It's more, you know, more programmable. But the valuation of Bitcoin is much higher. Like people are paying much more on a price to network basis for Bitcoin than they are for ETH. And I think part of the reason for that is, of course, the built-in scarcity and the decentralization, et cetera. But if some of the headline risk for ETH starts to dissipate based on the conversation we're having right now, and investors start to, you know, reward Ethereum more for its scalability, then, you know, you have potentially a lot of upside. I think also for Bitcoin, but maybe more for Ethereum.
Powell believes that Ethereum will soon overturn Bitcoin in value. O'Leary disagrees because he's seen that sovereign wealth wants Bitcoin and all of the volatility that comes with it. In the short term, the demand is for 2 to 3% portfolio average. Sovereign wealth has very decentralized assets in their portfolios, which means that they invest no more than 20% in an individual sector, and even less in any one name.
I think for financial services, I agree that ETH, gas fees are a joke. That's the problem. This will help solve for it. But if that becomes the default platform for other digital assets, that will help. But in the immediate term, the demand is for 1 to 3% of a portfolio, a standard. These sovereign wealth portfolios look like this: no more than 20% in any one sector, no more than 5% in any one name. So you're never going to find, Boeing or Bank of America more than 5% in a $900 billion fund. All the indexers know that. It's a really standard format. When you ask them, if you could buy a digital asset, which one would it be and what allocation? It's about 50 basis points on the low end, up to 300 basis points on the high end. And 99% of the time, they say Bitcoin. That's all they know. And so it's going to take a while for that demand to come. And I think it would be number two. And they certainly like USDC, and they love Solana and Polygon. You go down the list based on market cap. I get it. But right now, if we had policy on Bitcoin, I swear to you, the price would be $60,000 in 2 weeks.
And Kevin, if you index like Bitwise is doing a basket of crypto, let's assume they're not ready, as you say, but when they come in, they're going to want that kind of product, right? Because then that gives them, because we don't know, like you, we've all got a bunch of positions. We don't know what's actually going to win here or not. We can all have opinions, but it means nothing until we find out. But surely there's going to be big demand for index products in this space at some point.
Except the really big guys do their own index. They basically, they rent indexers like me, and they say, design this, because most often those commercial products are doing 20 basis points to 45 basis points. They're never going to pay that. You're lucky to get 2 basis points out of them. And so that you do the work, and then they have a custodial. And that's where it gets interesting, because Bitcoin trades 24 hours a day, and all crypto does. And that's a new beast for the compliance departments of these giant funds. But the demand, I mean, the reason I'm long now with all this volatility, we have 20% of our operating company's assets, that's our max, in crypto across 32 positions. I'm about to add Pollen, which is a decentralized telco. We've done a lot of research on. We like it. We think there's a lot of interest there, but that's a really fringe project. The point is, I'm trying to get ahead of the day, because we're all agreeing that at some point we're going to get policy. I need to be long before that happens, because that's the reward you're going to get, is when that stuff gets indexed. And whoever gets to index it, the demand for at least Bitcoin and Ethereum out of the beginning is insatiable. It is insatiable at the sovereign and pension level. As for all the skeptics that are, don't like crypto, they're going to watch that asset move into an indexed price, which I think is $60,000.
O'Leary says it will take a while for indexers to want to purchase Bitcoin, but he believes that if regulations were immediately put into place for Bitcoin, its value would skyrocket. Raoul Pal feels that because no one knows which digital asset will be successful, sovereign wealth would want to invest in an indexed crypto. O'Leary objects by saying that sovereign wealth already rents indexers. He says that the reason why he is now long with volatility is because he has 20% of his working company's assets decentralized in crypto. He has seen that the benefit of being long before midterms is in indexing. This is because demand for crypto will be unquenchable in sovereign wealth and pension circles. Who do you guys think is right about sovereign wealth and crypto? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.